I don't think that we've even begun to see where this is ultimately going to go. But I do believe that January in particular, they call it the January effect, where lots of money is being deployed. But because silver went so high, at the same time, the Bloomberg Commodity Index, they have to rebalance it. So some silver has to be sold by law, but that plays right into the hands of those that are coming in to buy it, plays right into the hands of the banks that want to scoop it up. It's going to be volatile. Don't get shook. It's going to be volatile, but come back and look at this mid-February, and I think things will start to make a good deal of sense. When we see the institutions closest to the metal prioritizing control of deliverable silver, not promises of future availability, in other words, where JP Morgan and Citibank are the two biggest recipients of all of the silver that they made Deutsche Bank give up. Now, normally, metal would flow back and forth between the banks in Europe and the banks in the United States. Remember, Tom Luongo has this theory that Trump is out to get the European aristocrats, and he'll do it by exposing the European banks, including the Bank of England. Well, all of this metal is coming back. And when you see Deutsche Bank have to cough up all of this gold and all of this metal to, in particular, JP Morgan and Citibank, it's like they're cannibalizing each other, that this relationship, this unspoken relationship, is now breaking down. And I think that is a really, 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 really big deal. To me, it's interesting because Citibank says it's for their house account. JP Morgan says it's for a client. Who's got that kind of metal?
Right.
Which clients want to take in this kind of
got
volume?
That kind of money? Yeah.
Yes. And so I just want you to understand that these banks never cannibalized each other. It seems like maybe, and they were either forced or willing to deliver to JP Morgan and Citibank. And the best way to say that is the smartest, best connected institutions in the silver market now want to hold the metal themselves right now rather than take the paper promises into the future. This has never happened to this degree. It just tells you that that's all you need to know going into this volatility. Hold tight. Even shut off your darn computer, come back and look at it in February. You'll be probably better off. And again, ask yourself, who's bringing in all this metal? As I mentioned, in December, there were 3.706 million ounces of gold that were delivered in December, plus 64.730 million troy ounces of silver. 64.730 million troy ounces of silver issued. But in the first 3 days of this new January contract, we've seen 4,249 gold contracts, 3,596 silver contracts. That's 424,900 ounces of gold, 17,980 ounces of silver come into COMEX in 3 days, December. Okay. In December, there were 3.706 million troy ounces of gold in the whole month of December. In the first 3 delivery days of January, there was 424,900 ounces of gold.
Oh, okay.
Not yet.
Not yet.
And 18 million ounces of silver in 3 days. Now ask yourself, if a mint box of silver, which is 500 ounces, weighs 42 pounds, who's bringing in 18 million ounces of silver in 3 days?
Right.
But this is every single month. And to me, the biggest crime in all of this is, where is this moron Jim Cramer, and where are all these talking heads who are so intellectual and so invested in helping the public understand what's happening? Nobody is talking about this. I've been screaming about it. This is all you need to know, you guys. This is it. The most well-informed traders in the world here in the United States, you could argue that's Wall Street, are bringing in billions of dollars every month. Billions. I mean, in December, what is 3.706 million ounces of gold times 4,400? What's 3.7 million times 4,400? Your calculator will go nuts. What is it? It's into the billions. But this is every single month for 13 months now. Since last November when he won the election. And that's all you need to know. China's been doing it for 2 years. China's been buying silver and gold doré and concentrate for 2 years or longer, pre-production, pre-refining. It disintermediates the market. That's exactly what Tether is doing. They're disintermediating the market. You know, my friend Keith Neumeyer told me a year ago, he said, maybe 2 years ago, he said, that he was at a conference speaking, probably right as we were coming out of the pandemic, and saying, "This is the first time I've ever seen auto manufacturers at the conferences I'm speaking at," which goes to show just how hard it is to mine silver these days. Of all of the 850 plus million ounces mined last year, only roughly 160, 70 million came from companies like Keith's. The majority of it, because it's depleting in nature, it's found up on top, like your skin is epidermis. It's found in something called epithermal near the top. So the big deposits are gone. It's mostly byproduct of copper, zinc, and lead, and they stumble across it. So it's becoming harder and harder and harder to find. But he said, yeah, they're coming right up to the conferences to disintermediate the entire marketplace. But that's what China's been doing. Sean Kun, who is the CEO of Dolly Varden, has told me this a year ago. Yeah, Andy, they're coming by the drove. They go to Mexico and Peru, number 1 and 3. China, number 2, largest producers of silver in the world. Buy the bars in doré form, buy the concentrate, a byproduct sludge, if you will, of the mining process. Pay double what the West will, ship it back to China to refine it. It's the same thing that we see now happening. The big money is doing all they can, whether it be Tether or the Chinese or Samsung. And I'm sure there's a lot more that isn't getting publicity. They understand that this is a depleting asset, one that you need it, or you can't make your product, or you can't have an advanced civilization in AI, robotics, high-tech military, all of these things. And that's why Trump made it a critical mineral in my mind. If you have nations that are saying, yeah, this is critical, and yeah, we agree, we're not going to send it out anywhere near like we used to. I mean, they will send some out, but if you're not a state-sponsored refinery, you can't send it out anymore. And there were all these small mid-level refiners that would send all their stuff out. Not anymore. You have to have a certain amount, like you have to produce a certain amount, be proven for a couple of years, and then get a permit through Beijing. But the state doesn't want to send this stuff out. It's going to have an effect. They're responsible for 60 to 70% of all the world's silver refining. And a lot of that would make its way back into the Western markets. And so if there is hoarding here on COMEX.
Let me start by saying something most people simply cannot wrap their heads around. What you are witnessing right now is not a price rally. It is a global migration. A migration out of dying currencies and into real money. A migration out of paper promises and into physical ownership. A migration out of illusions and into reality. And for those who have been paying attention, especially those who've watched the COMEX delivery data like a heartbeat monitor, the signals are not subtle anymore. They're screaming. I keep telling people, you're living through the end of a monetary era. And they look at me like I'm exaggerating. Really? If you think this is normal, if you think 13 straight months of record deliveries, billions of dollars of gold and silver being pulled off the exchanges by the same 2 or 3 major banks is normal, you're not paying attention. Because what the smartest, most connected institutions in the world do is infinitely more important than what they say. And right now, they are not diversifying. They are not hedging. They are not nibbling. They're draining the system dry. And here's what's shocking. It's no longer just the US banks making these moves. The European banks, institutions that once prided themselves on being the guardians of the London metals markets, are now cannibalizing each other. Deutsche Bank coughing up enormous quantities of metal to American banks wasn't supposed to happen. That is a fracture in the unspoken alliances that have quietly kept this entire pricing mechanism afloat for decades. You don't see that in healthy markets. You see that in desperate ones. You see that when trust collapses. You see that when insiders know the music is slowing and they intend to grab the last chair. And the part that absolutely staggers me is who's taking delivery. JP Morgan? Sure, they're always there. Citi? Yes, but one of them says it's for their house account, and the other says it's for a client. And I ask you, which client has the ability, the foresight, and the urgency to take that kind of physical? Because these aren't little orders. This is not some wealthy retiree buying a 100-ounce bar. We're talking 18 million ounces of silver in 3 days. We're talking nearly 500,000 ounces of gold in the first delivery window of January. More than 10% of what the entire month of December delivered. Who does that? And more importantly, why? Because they want the metal. Not a promise, not a futures contract, not a book entry, the metal. People keep asking me, Andy, what's the January effect going to look like this time? And I say, forget the January effect you read about in textbooks. The real January effect now is the rebalancing of major commodity indices that by rule must sell silver when its price rises too quickly. You would think that would push the price down, right? But here's what's wild. It's becoming a feeding opportunity. Every ounce the index funds mechanically sell is being scooped up by the same institutions accumulating physical off the exchanges. The selling is scripted. The buying is strategic. This market is turning into a battleground between those who must follow rules and those who understand the reality. You want to know how insane this is getting? Let's play with some numbers. In December, we saw 3.706 million ounces of gold delivered. Multiply that by $4,400 an ounce. Today's world, not yesterday's. Do you know what number you get? Your calculator starts to sweat. Billions of dollars being converted from fiat into metal every single month. For over a year. Quietly, methodically, consistently. Not during crises, not during flash crashes, during normal market conditions. And yet Jim Cramer isn't talking about it. Bloomberg isn't talking about it. The Wall Street Journal isn't talking about it. Mainstream financial media is allergic to this story because the moment you acknowledge that a global shift into precious metals is happening, you also acknowledge something far more terrifying. People with real money no longer trust the system. And that is the truth beneath everything. This isn't a trade. This isn't a speculation. This is an evacuation. Now layer on China. China has been buying gold doré and silver concentrate for 2 years, bypassing the global markets entirely by taking metal before it even becomes a bar. That's called disintermediation, removing the middleman. They want control of the supply chain. They want metal before the world even sees it. And now the refiners in China, the ones responsible for 60 to 70% of global silver refining, are being heavily restricted by Beijing. If you aren't state approved, you don't export silver anymore. That's not a coincidence. That is resource nationalism. And it matters because the West has been relying on China for silver refining since the mid-1990s. So when China says, we're not sending metal out at the same rate anymore, you don't need a PhD in economics to understand what happens next. The West screams shortage. The COMEX gets rated for deliverable bars. The LBMA inventories draw down. And the price begins acting like a tightly compressed spring. But that's only half the picture. Because it's not just nations doing this, it's corporations. A year ago, my friend Keith Neumeyer told me something that shocked even me. He said auto manufacturers, Ford, GM, Toyota, big names, are now showing up at mining conferences. Not investors, not fund managers, auto companies. Think about that. When was the last time someone from the automotive sector cared about visiting a silver explorer? Never. They historically didn't need to. Silver was cheap, abundant, and available. Not anymore. Silver is becoming the new oil, the indispensable ingredient for a functioning economy. And Keith explained why. Because silver is getting harder and harder to mine. The big deposits are gone. Most of the new supply is not coming from silver mines. It's coming from byproduct mining. And that means the miners don't scale silver production just because the price rises. They scale copper, zinc, lead. Silver output barely budges. So you have a commodity where demand is exploding. EVs, solar, AI, robotics, military technology. And supply is flat to declining.